Hey everyone, welcome back to the Mark Loeffler Experience. We've got another great show here for you today. Friday, we talked about, is the stock market going to crash? Well, yeah, we're sitting here looking at a report from TD Canada Trust, Canadian Housing Outlook, coming down the mountain. It just makes me want to sing, she'll be coming round the mountain when she comes. Woo! Anyways, maybe it doesn't make you feel that way. Anyways, so highlights of this report. Home sales are unwinding from their stratospheric first quarter levels. While we had anticipated a correction, it began a few months earlier than projected in our previous forecast in March. As the buying frenzy subsides, the more affordable condo segment is once again consuming an increasing share of the market, which means that people who bought condos when Alex and I told them to buy condos in December, January, are probably feeling pretty happy with themselves right now. Tighter stress test rules eroding affordability. Okay, well, this stress test actually doesn't erode affordability, so it's an erroneous statement. Then they go at the same time, however, high household saving rates, rising incomes, and stronger population growth will likely keep sales above their pre-pandemic levels. So they want their cake and they want to eat it too. But we're coming down the mountain. I think, obviously, being in the content creation business, I know that if you don't make the title clickable, like clickbaitable, nobody's going to read it. And I'm sure that with banking reports, this is more than true. Home price growth has eased considerably since March. Moving forward, softer overall demand that is more concentrated on lower priced condo units alongside more balanced market and tough affordability conditions in several provinces should restrain average home price growth to a modest pace. Well, that doesn't sound like we're coming down the mountain. That sounds like what we were talking about months ago, where we see a leveling off of home prices. Yeah, of course, we are seeing the Canadian home sales by units, right? Like you're looking here and you see that huge dip in 2000. You know, that was March 2020, where nobody knew what was happening. Everything was shut down. And again, we got on this channel and we told you all to buy. And apparently we were kind of right about that. But I mean, you look at that and we had a couple months of pain and then over exuberance coming out of it. And you look at that and peaks in March. And are we just going to, and they even say in this report that we're going to stay above historical average, which makes sense. Most of these dips are brought on by government intervention in some way. This in here was the first stress test, and boom, and then we come back almost to level. The carpets are not matching the drapes here, right? Like that's we're opening the curtain here. Canadian home sales ease but remain healthy, and you got to look at this and you got to think: is this just what happens in the summer in Canada when people can actually get out of their house and go out and enjoy summer and go to a restaurant and go visit their friends? Before we had nothing better to do. So it's like, okay, we'll buy real estate. Now it's like, oh, it's summertime. I mean, I think I'm a little bit guilty of this. Like I'm not working as hard as I probably did not last summer, but most summers. I'm taking a lot more time off. I'm enjoying it because, well, we've been working and we've been just, slogging away all year. Look at this. They're predicting a flat 2022 where every quarter is the same. And you see that's not even the case. Like it's probably going to looks more like 2019 where it's going to go dun, 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 and that's technical terms of dun, 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 dun. We're talking about savings rates. So what is going to derail this? And I go to another report from Scotia Bank. This is estimating that we have a structural housing shortage in Canada. And are we 100,000 or nearly 2 million units short? And what does that mean? So based on compared to the G7 countries, so other big countries with big economies, we are almost 1.8 million units short. Obviously, new housing starts went down during the pandemic and they're rising again. Yet the other factor is we did not see a big boom in immigration during the pandemic. It's slowed. It has. Yet we do know that we are going to see that boom in immigration again coming along. So TD calls us for a flat market. Scotiabank says we have a housing shortage, a structural housing shortage. What you can see in this chart here is a 36-month rolling sum of Canadian housing completions relative to change in population. So as you can see, our housing starts as to the change in population went down. And what this doesn't talk about is, like, say, infill projects where they're tearing one house down and they're building one more new. So every year we have been falling down. So here you can see housing units per 1,000 population in G7 countries. France is at 540. I guess that's Denmark, 508. This is the average, 494. UK is 433 and US 427. So just to get to between 424 and 427, we would need an extra 100,000 starts greater than the population growth just to get to 427. But every year for the last 4 years, our numbers have been going down. So our housing units per 1,000 population in G7 countries has been going down. So what does that mean? Well, simply put, we got all these people out here talking about who's affecting the housing market and who's the bad guy and who's the good guy. Well, I'm going to tell you the bad guy. It's our policymakers. It's a top-down problem, and it's not a party problem. It's not a partisan problem. It's a top-down problem. So it's not affecting just one area. It's affecting all areas. Basically, I think Scotiabank has it right when they're talking about what has to happen to fix this. Is we need to have a national level task force, whatever they want to call it, so they can pay their friends or whatever. And they need to get all the provinces on board and municipalities on board and bring in developers to that as well. Because, I mean, what happens when somebody tries to, I don't know, what happens if I tried to tear down my house and build 4 townhouses on that lot? Well, my neighbors would complain. I'd have to go to the Ontario Municipal Board. The city would say no. So, you know, I mean, I just look at Glen Abbey. It's a golf course in Oakville. They were going to put 3,500 units on there, and it got fought like you wouldn't believe. And lo and behold, the developer or golf course owner basically said, okay, never mind. We're not going to do this at this time. So there's 3,500 more units that aren't coming into play. Now, if you live in that area, you can say, well, that's good. On a local level, it might be traffic problems, infrastructure. Yet, at the end of the day, who is that going to hurt? It's going to hurt people who don't own real estate currently. Why? Because if you don't own real estate currently, that's 3,600 units not coming onto the market. That means you have to now go compete for the ones that are on the market. So if you restrict supply and the demand is going to go up because we know more people are going to move to Canada. It's just a foregone conclusion. More people are going to move to Canada than are going to leave. What happens? Demand goes up, supply stays same or doesn't rise to meet demand. Housing prices are going to go up. Whether interest rates go up, whether what happens or not, housing prices are going to go up. So at the end of the day, buy, my friends. Comment down below. Let me know what your plans are. If I can help you out in any way, I'm happy to do it. Thanks, everybody. We'll catch you in the next one.